If you ever wondered why real estate investing is so popular and why so many people want to do it, I'm going to give you the 5 reasons why, and we can summarize these 5 reasons with the word ideal. The word ideal is actually an acronym to describe income, depreciation, equity, appreciation, and leverage. So you can use these as the 5 reasons why you should be in real estate investing. Now, before I get into the details and break each of these letters down, I want to remind you that we are regularly posting content to bring value to you and to our community. We have almost 13,000 subscribers on our YouTube page and counting. So I would love for you to take a moment, subscribe to my YouTube page. It would be appreciated. Hit the notification bell, and whoever you know that is looking for information regarding creative real estate investing, holding companies, creative tax strategies, and really engineering $1 million enterprise, we provide valuable content on this page. It's absolutely free. Although we do have paid courses that we offer in coaching and consulting, we like to give you value. So hit the subscribe button, hit the notification button, and make sure that you stay connected with us. There's information in the description that if you need questions answered, if you need more resources, we have them available for you. Okay, so today we're talking about the ideal way for real estate investing. And again, these are the 5 reasons why I love real estate so much. Number 1 is the I for income. You get cash flow, especially if you purchase the property right. Now, of course, getting the cash flow will be primarily when you buy property and when you hold it. You're not necessarily getting monthly cash flow if you're not holding it. So if you're going to fix and flip the property, you're going to have an increase of income. It's going to be more capital gains income as opposed to cash flow. Either way, you're getting money. All right. Income is income. The second letter is D for depreciation. What is depreciation? Depreciation is basically the non-cash deductions that you're going to get. So when you buy assets like real estate, they depreciate. And when you depreciate, that means you're able to take non-cash deductions for this asset that's depreciating and put it against income that you're typically paying taxes on. So for example, and I'm not a CPA, I'm not a tax strategist, I'm just giving you my example as an entrepreneur. I have CPAs and tax strategists that do it for me. And a lot of times when they're explaining some of the technical sides of it, I don't get it. I just know I'm saving on my taxes. Okay, so I'm not going to attempt to be the expert at this, but I'm just giving you an example. Let's just say I have income that comes in that needs to be taxed, right? Okay, and let's say my tax liability on that income is 20 grand. So I got to pay 20 grand of taxes based on maybe 100,000 or 80,000 or 60,000, whatever my tax threshold is. But let's just say I have income that came in, it's active income, I got to pay taxes on it, and my tax bill is going to be 20 grand. But I have assets that I can depreciate, whether it's accelerated depreciation, bonus, whatever type of depreciation it is. We're just generalizing it with non-cash deductions through depreciation. And when I depreciate my assets, let's say my depreciation is a total of 20 grand. Well, generally speaking, if I have 20,000 of depreciation and I have a tax bill of 20,000, I can literally wipe that 20,000 out through depreciation. That's why it's critical, because real estate gives you that. All right. The third letter is E for equity. Equity is really the spread. So that means you have a spread. You hear people who own homes say, oh, I got equity in my home. What are they talking about? Well, even though they don't always do the right math, but generally speaking, the equity would be if you have a $300,000 home, right? And you owe the bank $200,000. Most homeowners will say they have $100,000 of equity. Well, not necessarily, because if you have a $300,000 home and you're going to sell it on the market, you have to deduct closing costs because you might have to pay them as the seller, agents' fees. So let's say if you took 10% of that 300 off for your fees associated to selling it, you really have 270. And if you owe the bank 200, you really have $70,000 worth of equity. So that's the spread. But again, when you buy real estate, you're going to get that spread if you buy it right. Okay, the third letter is A for appreciation. This is the increase in value of the home. Okay, traditionally or historically speaking, real estate goes up all the time. So you may have a couple years where there's a down market, it stalls, it plateaus. But if you look over the course of the historical appreciation of real estate, it always goes up. So when you buy a piece of real estate, think about it. The value is gonna go up if you hold it long enough. Well, the principal is gonna go down. If you buy a home for a certain dollar amount and you have a loan on it, as you pay it every month, the principal is going down and the value is going up, and you're creating more of that spread. But appreciation is going to help you do that. And then number 5 is leverage. Leverage is critical because you can buy a piece of real estate and leverage it with a 3 to 4 times or 3 to 4 multiple. For example, if I buy a $200,000 piece of real estate, well, I can literally put, worst case scenario as a real estate investor, I could put 20% down. Okay, that's 40 grand. So with $40,000, I can leverage with real estate and buy a $200,000 property. So that's a 4 times multiple. I'm buying something worth 3 to 4 times more with a certain number of cash. Okay, if you're a homestead buyer and you're buying a house that you're going to live in it, you're not even putting 20% down. Most times you're putting 3.5 to 5% down. But real estate investors are going to be somewhere around 10% to maybe 25%. But even at 25%, if I buy a $400,000 house, 25% is somewhere around 50 grand for a $400,000 asset. That's hopefully generating cash flow, giving me depreciation. I have an equity spread and it's appreciating. So it's always the ideal investment. If you want more information about how you can invest in real estate, don't hesitate to reach out to us. We work with investors, private money lenders, partners in deals. We educate our students and our mentees to show them how to get into real estate investing, and not just the traditional way of investing, but the creative way. So click the link in the description, reach out to us, and I'll see you in the next video.